time for Wave 3 Listens Live on Kentuckiana's first live local TV talk show, all hosted by John Ramsey. This is Wave 3 Listens Live.
And welcome to Wave 3 Listens Live. Hope you had a fantastic weekend. It is Brookstone Financial, your roadmap to retirement. Lots of interesting topics today. I'm joined once again by my co-host on Mondays. That is Seth Stewart of Brookstone Financial. Seth, welcome back.
Hey, John. Thanks for having me back.
Big baseball weekend. I'm excited about what the University of Louisville Cardinals are doing, but there may be some future University of Louisville Cardinals on the baseball team that you're worried about, right?
Well, let's hope. Let's hope. Yeah, if it's up to my son, he'll definitely be playing ball at U of L. He's a diehard U of L fan. But yeah, we actually got rained out this weekend. We were going to be playing down in E-Town, and boy, what an amazing sports complex they have down there in Elizabethtown. But the boys actually got rained out, so we headed home just a little bit early. There they are, a pretty rowdy bunch there in the dugout, trying to keep them under control. But they had a good time. You know, we got to spend a little time together, hang out, play a little bit of ball. But there's always next weekend.
Now, I've been to that E-Town complex. That is amazing. I don't know how that was funded or what, but it's an unbelievable facility.
And what an experience to get to play in that type of facility for those boys. I mean, they just, yeah, it's a great time.
Yeah, they'll make it. Even if they're in a dugout, they'll have fun.
Oh, yeah. Yeah.
All right, if you have joined us here on Mondays with Brookstone Financial, you know we always begin with the interest rate update because the market is fluctuating just a little bit. And Seth, again, I'll have you do the play-by-play.
Yeah, John, interest rates really have nowhere to go but up from here, let's say. Money markets at Brookstone Financial, FDIC insured money markets paying 0.80%. 3-year fixed annuities, and that's a fixed rate for all 3 years, 2%. 5-year fixed annuities, 3.15, no more, no less. And 1 to 3 year maturity bonds right now, 1 years are at 5%, 2 year maturity bonds are at 6.5, and 3 years at 7.5. John, I get the question a lot. They say, well, wait a minute. On that 2-year bond, does that mean I get 6.5% each year over the 2-year period? And that's absolutely correct. It's each year. So that's a pretty good yield on those bonds.
Yeah, not too shabby. We'll talk more about some of those investments that you might want to consider. But also want to talk real quickly about the relationship you have a little bit more with the Ronald McDonald House, because last week we had a gentleman on. We talked about what Ronald McDonald House accomplishes, how Brookstone Financial is tied in. And if you want to join in and help out, Golf Scramble.
Yeah, we have an upcoming Golf Scramble, proceeds to benefit Ronald McDonald Charities of Kentuckiana. We actually had Hal Headley, the executive director from the House, on last week to launch this, to kick this off. It's at Wooded View. We have 2 events, actually, 2 dates. One at Wooded View, that's Saturday, July 18th, and then out in Sultan's Run, Saturday, August 8th. Sultan's Run, beautiful course, as well as Wooded View. It's $300 per team. That's a 4-man scramble. Again, the money goes to a great cause, which John personally, I told you a story last week, has personally touched our family's life. There we are last year out at the scramble, again raising money for Ronald McDonald Charities, and it's just a great time. It's a fun-filled day. So
yep, I want you to get involved in that, yeah, because it's that time of year. You want to swing the clubs anyway. Why not do it for the Ronald McDonald House? Yep. Okay. Alternative assets, that is the topic today. Yeah. So when you say alternative assets, does that mean options for investing your money? Is that basically it?
Well, I mean, we got to start looking outside the box, John. I mean, the world's changing at a very rapid pace. Information travels at breakneck speeds. So we have to start looking outside the box from traditional stock bond allocations. And you see a lot of major institutions, major endowment funds making a move heavier into alternative asset classes. And most individuals are familiar with stocks and bonds. But there's other asset classes outside of stocks and bonds that have the potential of bringing a lot of stability to your portfolio, but also the potential of bringing increased returns at the same time.
Now, obviously, we have a limited time on this show, but you actually have an event that's coming up that's going to talk about some of this,
We do. It's called the Alternative Asset Summit, and we're going to be talking about a lot of different alternative asset classes that many investors have never heard of. It's at the Courtyard Marriott out off Hurstbourne Lane. It's June 11th, 6 to 8 p.m. There's the number if you'd like to call and RSVP. Great opportunity to get yourself informed and up to speed on just what are alternative asset classes.
You know, something I wanted to talk about, Seth, is we don't, is that, that time of your life when you're getting ready for retirement, it can be very exciting. I think sometimes people think, oh, am I ready? Can I do this? But, granted, I think they want to talk to an expert like yourself or someone with Brookstone Financial, but I would think that would be, you know, an adrenaline rush. I've been working really hard. I think I can do this. I would think it would be an exciting time in your life.
It is exciting. I can tell you, you know, it's rewarding for myself, but it's also a little scary for clients that are really, you know, that's a big change in their life. You know, they've worked for 30, 40 years. Now they're taking everything that they've worked for and accumulated, and they have to rely on that for income in the future. And, you know, that's a great lead-in to alternative assets and how they work and why we use them when we're helping clients plan for retirement. And I have a graphic here that I'd like to show the viewers at home just to give you an example why we use alternative assets at Brookstone Financial. And if you look at the stock market in general, I mean, the stock market, you're likely to see a lot of volatility. I mean, that's just the nature of investing in the stock market. All in all, though, what we're looking for, obviously, is more of an upward trend. Volatility in between, that's inevitable. Now, if you're putting money into the stock market, you're contributing to an IRA or 401k, this volatility can actually be beneficial, because if you're making contributions here, or even out here, you're catching things when they're on sale. I know it's a little tough to see that. There they are. Those low points, when you're able to buy in at those low points, you're catching things when they're on sale. But now, if you're taking money out of a portfolio in retirement and you catch the market during those downswings, now you're backed into a corner, potentially forced to sell when things are on sale, and that can be devastating.
I see. So someone like yourself or one of your peers there at Brookstone Financial can actually look at that, kind of anticipate the market and make the right move at the right time?
Well, it's not so much about anticipating the stock market, because that can get pretty risky, you know, trying to call the market. That's anybody's guess unless you have a crystal ball. But what we like to do is build in a lot of stability to a portfolio to eliminate a lot of the volatility of the market.
Okay, so when we talk about alternative assets, let's discuss a few of them. I noticed on my little rundown here, REITs. We've talked about this before, real estate investments basically, right?
We have, yeah. REITs, Real Estate Investment Trust, that's REIT, that's one form of alternative. Another is BDC, and that stands for Business Development Corp. Very interesting opportunity, you know, a lot of stability in the share price. And last but not least, and we're going to elaborate on these today, L bonds, which are life settlement bonds. So we'll talk more about those later.
Yeah, I wanted to tease that just a little bit. We will talk more about those later. And also, we're also going to mention a certain university here in the state that does something a little bit differently. I think it's a good example.
It is a good example. And John, this is actually an endowment investment policy statement from University of Kentucky. And they made a major move. And if you look at this is public record, by the way. You can get online and download this investment policy statement. How are they managing their money? University of Kentucky in this particular endowment is 66% allocated to alternatives. Folks, that means that they're only 34% traditional stock bonds. And that's what most investors and traditional brokers, that's the way they're allocating their clients. So if you see a major institution that's managing tens of millions, if not hundreds of millions of dollars, moving to alternatives, that may tell you something, and something you need to pay attention to. All
righty. Alternative assets. We're going to talk more about those. We touched upon them. More details coming your way. Brookstone Financial. He's Seth Stewart. We'll be right back on Wave 3 Listens Live. And welcome back. If you'd like to win, thanks to Brookstone Financial, a little bit of a trivia question. Seth, this is a good one.
Yeah, and pay attention throughout the show. We're actually going to give you the answer to this one. All of the following are considered alternative assets, except A, REITs, B, BDCs, C, ETFs, or D, L bonds. That's a $100 gift card toward your next home project. It's interior painting services offered toward or by industrial coating contractors.
All right, thank you so much. And we've got an event coming up. I want to remind you once again, if you'd like to know more about alternative assets.
Yeah, John, this is our Alternative Asset Summit. It's going to be held out off Hurstbourne Lane at the Courtyard Marriott. It's June 11th, 6 to 8 p.m. There's the number to RSVP. We do have about 20-25 seats available for that event, but call now. Seating is limited. And actually also, John, if you want to go to the website, you can download a lot of great information about alternative assets directly from our website at brookstonefinancial.com.
So I see all these acronyms here, and now we're going to learn a little bit about them. And this is the kind of thing you will learn at the Alternative Investment Summit, however, probably in more detail, a little bit more time, correct?
Exactly, yeah, and a great opportunity to ask a lot of questions, and I'm sure that's what people are going to walk away with from today is a lot of questions. You know, go into more detail about what these are, and that's what we're going to do during this segment is really start to break down 3 alternative asset classes or offerings in particular.
And there's reasons to be interested in each one of these. The first one we talked about real estate. You were telling me at Brookstone Financial that you guys really look at opportunities. Yes. Opportunities based really in the future, and that's your job. So here we go.
And the real estate market, John, all in all, is really non-correlated to the overall stock market, the Dow, the NASDAQ, the S&P. So what happens in the broad market doesn't necessarily drive real estate prices. What drives real estate prices more than anything is called occupancy rates. If I have a portfolio of 100 pieces of real estate and 90 of those pieces of real estate are on long-term triple net leases, that's a 90% occupancy rate. Well, let me ask you a question. Where are we likely to see high occupancy rates in the future? Adult daycares, assisted living centers, and nursing homes. John, because we have a demographic trend that's factual today. It's numbers, right? And the aging population is going to push more individuals into those types of facilities, the adult daycares, the assisted livings, and the nursing homes. And from that standpoint, that's one area of real estate we absolutely love, and it brings a lot of stability to the traditional stock bond allocations.
You're hedging your bet, so to speak, because you see it's not a trend, it's a fact. We're getting older.
Yeah, we are getting older. There's 10,000 baby boomers turning 65 each and every day. Roll the clock forward 15 years, we have 10,000 turning 80 each and every day.
There we go. That makes perfect sense. Okay, BDCs. What exactly is a BDC?
Another interesting one. Okay, BDC stands for Business Development Corp. John, BDCs became very popular back in late 08, early 09. Because here's what happened, folks. During the market downturn of 08 and 09, banks really stopped lending. I mean, they really tightened lending. And large corporations had very little cash on their balance sheets. They were relying heavily on lines of credit to keep day-to-day operations funded. Well, BDCAs have been around for years prior to that, but they gained a lot of attention when the banks really stopped lending, because what BDCs provide is short-term financing so that corporate America can keep things running, pay their overhead, pay their payroll, and so on. So the corporations had nowhere to go. They were backed into a corner. They didn't have the cash. The bank said, look, we're not going to renew your line of credit. So BDCs were able to step up and charge, maybe 7.5%, 8+% interest to give corporate America the access to the money that they needed to keep day-to-day operations funded. So BDCs have really kind of started to take the place to some extent of commercial banks and commercial banking. And it's basically, it gives the investor the opportunity to invest in a type of banking relationship with a corporation.
Would this be a short-term investment, or would this be more long-term?
Most of these are considered long-term. Most alternative asset classes are considered long-term. When I say long-term, John, I'm probably talking 5 to 7 years, okay? But to put that in perspective, I see a lot of people out there right now going and buying 15 to 20-year maturity corporate bonds to get yields that are 5, 6, maybe 7%, where you can get a very similar yield in this type of vehicle for a third of the maturity range. So we're using these types of assets in exchange for or replacement of bonds right now, long-term bonds.
Okay. And speaking of bonds, that's our next alternative asset, L bonds.
Yeah, L bonds. And here's the L in my, I use the L and think of the L as life, okay? Life and death is inevitable. I mean, death is a fact of life. And here's what L bonds do. And to set this up, let me tell you a story. Let me say I had Bill and John came into the office and they said, hey, we just sold our company, right? We have these 2 large life insurance policies that we don't need any longer, right? They're $500,000 in death benefit. We're paying $10,000 a year premium, but we don't need them because they were used to fund a buy-sell agreement for the company that we have since sold. So in the past, they had 2 options. They could walk away, take the cash value, and get what little cash value was left in the policy, or they could just let it lapse and implode upon itself. Now they have the option of putting that policy in the secondary market and getting bids from institutional investors, and they pool these policies, John, and then they sell bonds based upon the death benefit of the policies within the pool. So again, has nothing to do with the Dow, the NASDAQ, the S&P. It's totally non-correlated to the market.
It sounds pretty much like a good investment, though, a good solid investment, correct?
It's based upon facts of life. I mean, it's an alternative investment, okay, and it's a good good complement to an existing, a more traditional portfolio. But again, it's a complement. We're taking about a 20, maybe 30% allocation to alternatives.
As folks are out there watching, what kind of client would be looking for some of these alternative assets? Someone maybe who has the majority and they want to be a little safer, or is it someone who maybe wants to take a little bit more risk?
You know, all of the above, because these alternative asset classes have capital appreciation opportunity at the exit, but what they more importantly provide for the majority of our clients who are in retirement is consistent, reliable, predictable income. So if you're looking for that money to show up in your mailbox or the money to show up electronic deposit in your bank, and you want to know exactly what's going to show up every month, this is a much more predictable method than drawing money from a portfolio, because these are non-correlated. They don't trade in the market, so therefore your dividends don't fluctuate with the market.
Oh, okay, that makes sense. So again, I would think if you want to learn more about it, go to this Alternative Asset Summit, learn a little bit more, question and answers, and you'll help everyone with that. Let's put that information up on the screen if you would, please. This again is the Alternative Investment Summit.
Yes, John, it's at the Courtyard Marriott just off Hurstbourne Lane. It's June 11th from 6 to 8 p.m. There's the number to call to RSVP. We have about 25 seats available, and we're actually going to have some product sponsors from various companies that offer these types of alternative asset classes to answer questions firsthand. So not only are you going to hear it from us, but you're also going to hear it from the companies that actually package these types of products and offer them to the consumer.
Interesting. All right.
Yep.
You might want to make that call quickly. About 25 seats, you say, available?
Yeah, we have about 25 seats available.
All right. Again, that's the new Alternative Asset Summit offered to you by Brookstone Financial. There's many reasons to go to the website, and we encourage you to do that as well. A lot of free information there. I think folks should go and just check that out, too.
Yeah, and John, actually up right now is a download for an alternative asset report. So if you want more information on alternatives, such as the ones we discussed today, and many more, go to the website, Brookstone Financial, download the report, or RSVP for the event. Right there's the website, Brookstone.
All right. If you've had questions about Medicare, we may have your answers. Brookstone Financial is going to provide those. Coming up next on Wave 3 Listens Live. As you know, Brookstone Financial and Mr. Seth Stewart are guests of ours every Monday, and we welcome them. We're going to have a new little segment here, Medicare Minutes. Now, exactly what will this cover?
John, it's going to cover all things Medicare. I mean, we are one relationship, a team of professionals. We're very fortunate to have a Medicare specialist, Mr. Larry Riff, on staff. Larry, every week, is going to be taking questions from viewers at home via phone, email, to answer some of the most commonly asked questions regarding Medicare. You reach age 65, you got two big decisions to make: when and how to file for Social Security, and what to do with Medicare.
All right, so here we go. Medicare Minutes with Mr. Larry Riff.
Well, good afternoon. My name is Larry Riff, and I'm with Brookstone Financial. Today I'm going to address a question I received via email from Angie. Angie says, I have received a lot of information about Medicare options in the mail and on the phone lately as I near my 65th birthday. Can you tell me more about the various parts of Medicare? Well, that's a great question, Angie. There are certainly a lot of pieces to Medicare. There are 4 specific governmental parts that I'd like to share with you today. The first one is Part A. It's for hospital and inpatient care. The second is Part B, which is for your medical expenses and your outpatient care. Part C is Medicare Advantage plans, and Part D is for prescription drug plans. Now, Angie, while all those parts are voluntary, one needs to be sensitive to the potential penalties for late enrollment outside of having credible coverage with an employer. Lastly, while Part A is free to all who qualify, Parts B, C, and D are fee-based plans, and they depend on individual situation, Angie. Now, a person can sign up for Parts A, B, and D 3 months prior to their 65th birthday, with coverage that will begin on the first day of their birth month. Again, it's important to remember that without credible coverage and enrolling late for Parts B and D, it may result in late fees or penalties that will last as long as you have these plans. Have a great day, and thanks for the questions, folks. Take care.
All right, Larry Riff, Medicare Minutes. This is what Brookstone Financial does. Experts that really come up with solutions. If someone wanted to meet with Larry, if they have questions, I'm sure they do.
Yeah,
how do they do that?
Absolutely. So Larry does offer 1-hour complimentary consultations with all the viewers. If you'd like to take advantage of that, give us a call, Brookstone Financial. Our number is at the bottom of the screen, or you can visit our website at brookstonefinancial.com. Again, we're very fortunate to have Larry as part of our team at Brookstone, and each and every week he's going to be diving a little bit deeper into the complex world of Medicare.
All right, that is. I'm sure there's a lot of questions about it, and as you said, we're all getting a little bit older.
Yeah.
Folks, you might not have questions today, but you may tomorrow. Don't forget the name Larry Riff and Brookstone Financial. Okay, many reasons again to go to the website, and so the best form of advertising, we all say it, word of mouth.
Yeah,
and we talk about this a lot. You have a rewards program for folks who tell their friends, right?
We do. We have a rewards program, just a way to say thank you to our existing clients or people in and around the community. You know, whether you can benefit for what you're hearing on today's show or not, maybe it's your neighbor, maybe it's a family member, we offer a $50 prepaid Visa MasterCard just as a way to say thank you for that referral. So if you'd like to take advantage of the Brookstone Client Rewards, get that $50 gift certificate, there's the number at the bottom of the screen. Give us a call, and we'd be more than happy to take care of your friends, your family members, your loved ones, co-workers, and so on. So
for those who are just joining us, we talked about meeting with Larry and free Medicare advice, but if they have advice about or need advice about their roadmap to retirement, their particular situation, you do consultations as well, right?
We do, John. Yeah, we all offer 1-hour, one-on-one complimentary consultations. It's a great opportunity just to get to know each other a little bit better, see if it'll be a good fit, take a look at where they are today, and determine if we can bring any type of value to the table to help them get where they're trying to get in the future.
And I think it's important for folks to know that you're really not pushing products. It's you want solutions. Okay, here's where you want to be, here's what we recommend, that kind of thing.
It is, and that's one reason why we realized, you know, that we can't be an expert in all areas, and with Mr. Riff on board with us, you know, it brings a lot of value to the table because most of our clients are 55 years of age or older. The Medicare question came up a lot. I know enough to be dangerous about Medicare, so I knew well enough that we had to partner with an expert.
All righty. Once again, Brookstone Financial, as I mentioned, many reasons, go to the website, and don't forget, big event coming up. If you're interested in alternative assets that we've been discussing this entire show, they've got a big event coming up. It is you're calling it Alternative Events or Alternative Asset Summit.
Yes.
Oh,
yeah.
Now you know it's big when it's a summit.
Yeah, it's going to be pretty broad. Yeah, we're going to discuss a lot of information, a lot of different alternative asset classes, a lot of different opportunities. But not only are we going to be there, the team with Brookstone, but you're going to see some of the product sponsors there as well. So if you have in the weeds, in-depth questions, you know, that we may not be able to answer directly, the product sponsors will be there to really, you know, to hear it straight from the horse's mouth, and that's the best way. That's what I encourage my clients. June 11th, 6 to 8 p.m. It's out at the Courtyard Marriott just off Hurstbourne Lane. There's the number to RSVP. Seating is fairly limited, so get on the phone now and RSVP.
And you were telling us, we were talking a little bit about this, but it's kind of funny how when you get out there, I guess because everyone's of similar age, probably, you might see a lot of your friends. You didn't know they were coming. It's like, oh, here we go. It's like everybody's
that happened
talking.
the last event we did, John. Yeah, we were promoting here on the show. A couple people showed up. They looked across the aisle from each other. Hey, I didn't know you were here. You know,
which is kind of cool.
It is cool.
I like that. Really cool. All right, your roadmap to retirement, as I said, it's all about solutions, and I think that's how Brookstone, to me, the more I get to know you, that's kind of how you guys were created, and you expanded upon that. Let's add all these experts. You probably find out about different questions, different situations, and you go, you know what, let's get a team of experts involved, and then we can really help our clients super serve them.
Yeah, I think people think that when they walk into the office, we're going to tell them to just wipe clean everything they've been doing up to this point and start over. I mean, they're surprised to see that, you know, we'll complement many of the holdings that they have, but we, you know, it's kind of like a recipe. The recipe's been handed down for years and years. We sprinkle our little value on there from time to time. But we do use a very comprehensive approach to planning. We call it the retirement roadmap, as you've mentioned. This little probability success meter you're seeing here on the screen on the iPhone.
It's cool.
It takes everything into account. So it takes, what it does ultimately, John, is takes the emotion out of the equation. Because when the market gets bumpy, the market starts swinging up and down, if you don't have a clear roadmap to your retirement and know where you stand and know how much fluctuation you can handle, potential in your portfolio without derailing you, it's very easy to make emotional, irrational decisions. And I saw that happen a lot back in 08 and 09. You know, people sold at the bottom, and if they would have just held in there, and I know it sounds a little cliche, but if they would have just held in there, they may have been not only even, but farther ahead than where they were back in 08 or 07 prior to the market downturn.
I like the probability of success mean, because what it would give me is peace of mind. Where am I? How am I looking today? And I can look on there. I'm okay. I'm in the green, right?
Yeah, when you have all this stuff and you really have no correlation or coordination between these accounts, it's tough to, you know, people ask us all the time, you know, I'm retiring. I've got all this stuff. Which account do I draw from first and why? And that's what we help you answer. That's the million-dollar question. How do you spend your money efficiently and effectively and minimize the risk of running out?
All right, coming up, we had a trivia question from Brookstone Financial. We'll have a winner. All of that is next on Wave 3 Listens. We have trivia questions. We have a trivia answer.
Yeah, here's the question, John. All of the following are considered alternative assets, except the answer is C. ETFs, exchange-traded funds, are market-driven. They trade very similar to mutual funds. They are very similar to mutual funds.
Wow, you straightened out a lot for me today. But again, I encourage you to go to that summit. If you need information about Brookstone Financial, go to brookstonefinancial.com. There's the phone number on the screen. They'll meet with you one-on-one, and it's absolutely free.
Absolutely free. A lot of great information on the website. If you like what you heard today, download the free report on the website about alternative assets.
And we'll see you next Monday right here, more with Seth with Brookstone Financial on Wave 3 Listens. Have a good one.